Well, hello and welcome to a special segment called as MC Pro Select Stock of the Day. I'm your host, Nikki Muchandani, and in this segment, like always, we bring to you fundamentally strong investment stock ideas. Today's stock of the day is Bombay Stock Exchange, that is BSE. A bit about the company, Sundaraman Ramamurthy stepped into the CEO role at BSE in January, finding the exchange in distant second position behind NSE across cash equities and derivatives. Now, BSE held mere 7% share in cash equity market by September. Determined to revitalize BSE, the new CEO initiated multiple changes across the board, revamping strategies in cash, equity, currency, derivatives, and equity derivative segments put together. Despite the uphill battle against NSE dominance, the CEO approach rather has been it's taken in proactive measures to propel BSE back into the competitive space. Now, what explains this staggering rally in the stock? Well, BSE stock price has surged dramatically, more than tripling year to date and reaching to an all-time high level this month itself. The strategic efforts to boost trading volumes, especially in the equity derivative segments, has proven successful. This transformation has shifted the BSE from being perceived as value stock to a dynamic growth stock. Now, such remarkable transformations are uncommon and tend to yield non-linear rewards, reflecting the market's response to the exchange revitalized performance and potential for future growth. Let's also talk about the earning performance in the quarter gone by, that is Q2 FY24, where the company BSE achieved highest ever quarterly revenue, propelled by increased transaction charges and listing income. The growth trajectory extended into BSE Star, the mutual fund distribution insurance platform, basically sustaining momentum. Notably, the EBITDA margin surged to around 45% in the quarter, a significant leap from 7% in the same period of the last year, signaling substantial operational improvement and efficiency gains for this company. Now, there has also been a sharp gain in the market share of the derivative segment of the company. Now, BSE made significant changes by relaunching Sensex and BankX derivative contracts on May 15, altering lot sizes and expiry days. Particularly impressive was the reintroduction of a weekly index option contract Sensex in May 2023, marking notable progress. BSE's market share in equity derivatives surged to 10% by September end, a remarkable leap from zero share in April, right? Reflecting substantial gain in its presence and participation in the segment put together. Monetizing efforts to support future earning growth. Well, in Q2, BSE generated around 5 crore in gross revenue from derivative segment. However, it incurred in higher clearing and settlement cost of around 15 crore for the same period. To counterbalance this, BSE implemented increased transaction charges on Sensex options starting November 1st, 2023, indicating an expected surge in derivative segment revenue for the later half of this financial year. Looking forward, BSE anticipates additional avenues for long-term growth through commodities, INX, SME listing, and its collaboration with EBIX in insurance broking, highlighting diverse set of strategy beyond derivatives to foster sustainable growth. All right, this brings us to a pertinent question. Most team left in the stock. Well, BSE stock has a significant surge while experiencing in upgraded earnings, currently trading at 43 times its estimated core earnings for FY25, indicating a substantial valuation re-rating attributed to market share gains. With this momentum, investors can anticipate exponential earning growth, driving further upside potential for the stock. The rally reflects confidence in the company's future performance and the prospect of considerable earning expansion. A couple of risks out there. BSE is vulnerable to weakness in equity markets and adverse regulatory changes, both of which can negatively impact volume and profits of the exchange.